Hey guys, how's it going? Welcome to Friday's recap of the London session on the 11th of March 2022. So, 4-hour chart, we mitigated the 4-hour extreme supply. This is the way I've mapped structure. I'm not in love with this swing pullback, but it is what it is. For me, it meets enough sort of the rules in which I'm going to classify it as a swing pullback. Obviously, using a little bit of discretion with measuring pullbacks at this stage, but it's over 80 pips. For me, it makes sense. So we mitigated that extreme inside bar supply. We swept this liquidity, obviously quite a big volatile sweep as we had the Euro rate announcement at press conference yesterday, and then pretty much an aggressive retrace to the downside. So if we keep things very simple, right, and we try and keep it very mechanical, this should be the strong swing high. This should be the weak targeted low. We've come into the extreme supply. And we've had a rejection, so now in theory we should just be looking for shorts to take out this low here. And that's basically kind of one way I'm looking at it, and I am looking for short continuations to target here, but also in the back of my mind I'm open to looking for longs in case this mitigation of this supply level is simply just to facilitate a pullback to 4-hour demand, whether it be here or whatever, to then continue that deeper daily pullback up into the daily premium. But what also adds confluence to shorts or to the idea that that lower high is now in place is that price has pretty much mitigated the prior daily supply range. So on this data feed, I think it missed the low by let's see, the low of this candle is 21.5, the high of this candle is 21.1, so 0.4 pips, right? But for me, all intents and purposes, price has pretty much come up to the swing range, right? It'll be slightly different on different data feeds. I'm talking about a daily chart here, so 0.4 pips, whatever. I'm happy to kind of read between the lines here. That's a pretty decent level for price to continue down. With that said, this is still quite a sharp sort of V-shape rejection from that extreme weekly and daily demand. So I do think there's still potential we could have that deeper daily pullback. But until that happens, right, let's not overthink it. We've had a mitigation of extreme 4-hour supply with quite an aggressive retrace. So, shorts are definitely high probability to look for that continuation. But then I'll also be, more than happy to look for longs from within here. But what can add confidence to that even more, right, is if we were to, clear this 4-hour supply zone that has now just formed, essentially give us that bullish chock there, and then you could potentially look for that move. So it's kind of one of those cases where in theory path of least resistance should be looking for shorts to take out this low, but I'm also open to looking for counter trend longs. But do bear in mind that they are counter to the M15, the 4-hour, the daily, the weekly, right? All longs are heavily counter trend, so I would focus on those shorts for sure. So M15, obviously we can see that big volatile retrace even clearer yesterday on Thursday's price action, which then led to a bearish break of structure here. So at this very point, now the M15 is back and aligned with the 4-hour chart, right? So essentially the M15 just switched bullish to do what? To facilitate the 4-hour pullback to 4-hour supply. Now the objective is complete, right? So this is where it becomes higher probability to look for those counter M15 shorts. Obviously, it was there and it wasn't as volatile. But once we've then switch bearish again the M15, right, so I'm saying now we can target that weak 4-hour low. In theory, that should be the easiest trade. So coming into London, price was around here. Okay, so at this point, let's talk about structure a little bit. So yes, there was a decent pullback here, and that was over 30 pips. So if you're using that kind of strict mechanical rule, which to be fair, I would advise that the majority of you just should use, it keeps it simple, right, removes any element of discretion. Then yeah, that is a swing pullback. I kind of just looked at it as one push down and a pullback like this, using a little bit of discretion at the moment, right? And that's why I didn't have that as a swing breaker structure, and I had this as the swing low. So we could have pulled up to some of these levels. However, very aware that we also have this sort of supply chain forming. However, as you guys would have seen in my analysis in the morning, let's just draw it on so you can kind of see how I was viewing it coming into London. Let's see, I think I had this drawn on right. You can see a bit of a demand chain forming. Right, and then just try and get this one to draw. Cool. All right, so it kind of has something like this. And at this point, price was within here. So I know that the M15 is bearish, it's aligned with the 4-hour chart. We want to target this weak low down here. But when price was here, it was kind of just getting a bit messy. It was pinging between supply, demand was kind of getting in here, and it was all just a little bit messy, okay? So that's why I wasn't super hot and trying to look necessarily for M1 shorts within here. But let me just zoom in a second. But once, as we'll see, it'll be a bit clearer on the M1 when we drop down. But basically, once price started to do this, so I could see that we'd swept this high into here, right? And then as the volume started to kick in for Frankfurt coming into London, right? And you can see that move happen there and basically wicking that low. I'm now viewing that as essentially the demand chain starting to fail. It then gives us a fresh M15 supply zone, and then pulling back into here for me was where the high probability short was to take to then target this low, okay? So there was a nice M1 risk entry within here, which we'll take a look at in a sec, which is definitely valid. Essentially viewing that right as the pullback to supply. Pretty reasonably impulsive move down, nice corrective pullback during Asia. We then essentially get, it's not truly the chock because at this point the active internal high and low is here, okay? But it's, remember, pro trend where you get the pullback and then just looking for that sign from structure that pullback now be over. We take out that low. We need a better name for it. I don't know what we want to call it, right? But essentially that is an internal break of structure. It's the internal structure of the internal structure. But I've been over this a few times, so hopefully you guys can kind of understand when to use that nuance. But essentially it's when it's the pro trend move, okay? So the pro trend pullback is over. We're looking for a sign that pullback is now over, okay? This causes the break of that. Pull back into here, okay? And then you can look for the short. I wasn't necessarily really that keen on that just yet, just because I was kind of seeing this as all quite corrective and potentially we could break out higher. But once we had that sweep, nice movement down, essentially wicking that low. I viewed that as the demand chain is now failed, supply is still clearly in control. And then when we got the pullback into here, I was looking for an entry, might have been around here actually, I'll look at the M1 in a minute, to then target this low, but didn't quite get in. Then we came into this M15 demand zone, right? So after we have an M15 break of structure, what do we expect? We expect an M15 pullback. Safest thing to do is one, wait for M15 demand to be mitigated, okay, tick. Also benefits is we have the 4 hour box as well, right? The 4 hour, I think it's sell to buy wicks. So not the best 4 hour zone in the world, but it's 4 hour demand nonetheless. But what's the next best thing you want to wait for is you want to wait for an M15 bullish change of character, but obviously that would have to be all the way up here, right? So I wasn't going to get that. So there was a very aggressive M1 entry within here. It was pretty crap. I think kind of, a bit of FOMO got the best of me that I'd kind of missed the short move, and I was looking to play kind of a very aggressive, quick in and out 5 hour trade, but got stopped out. And then, prices come down and mitigated the higher probability M15 demand zone because it's kind of the extreme of this pullback, right? Using this as inducement. However, this is kind of the end of the session and there wasn't an M1 chock. So we'll talk about this in a little bit in a bit as we look at the analysis for New York. But that's kind of the two ways I was looking at anyway. Didn't really like this initially, kind of pre-Frankfurt. And then once we got that sweep, mitigation of the M1 extreme within here, you can clearly see there's a supply chain, right? And then once this basically took out that low, wicked it, right? I've seen this demand chain is basically starting to fail. So now looking to just catch that very short of flow to take the low, but didn't quite get an entry. And then I tried to play a pretty damn low probability counter trend trade and took a loss. But it is what it is. So let's take a look at the M1. So essentially that's been your demand chain. I'm just going to delete it so you can see the price a little bit clearer. So we had that nice pullback during Asia, right? So you can see impulse down, pull back into M15 supply. We essentially get that M15 internal break of structure, whatever you want to call it. I see it as a change of character of that pullback ending. Now we're ready to get the pro trend run, right? So then we pull back into that M15 supply that caused that internal break of structure there. And this is where you can take that refined M1 risk entry within it. So we have the extreme M1 supply, right? This is already mitigated, obviously. Yes, price could come up and mitigate something within here, but generally, once the distal has had a pretty decent move away, you can then look at the next supply zone. This is a flip, which is even better, has some nice inducement, but what was even better is it built perfect equal highs just below that. Okay, so then coming into, what time was this? Just after Frankfurt Open, nice aggressive sweep, V-trace back down, essentially reacting to demand within here and pushing down, but it wasn't really the clearest, right? It's all kind of, as price is down here and I'm looking where to enter on the M1, I've got these buy to sell wicks, I've got this doji, but the doji had basically already been mitigated, and then there's something maybe within this wick in a lower time frame, but it's not clear at all. So if you kind of follow the M1 zones, this really is the only zone that makes sense. But for me, I just didn't have high confidence on that enough. It wasn't clear enough for me to want to set an entry order on. But as you can see at that point, that was that M15 internal low that price had broken down. So that's why I was happy to look for the shorts, but I just didn't see a level which I was, to me, super clear, right? I could have rejected anything within here really. So I would have been happy to then play an M1 confirmation entry. If we had got something like that, that would have been perfect, especially after using this as inducement, right? Sweeping that high. Obviously got quite a sharp retrace, so there's no M1 entry, only on the seconds. And then we got an M1 break of structure, which then tells me this is a strong high, it's swept liquidity, it's following the mitigations, okay? So then this for me was a very high probability level to look to get short from. 2 pip stop, probably could have used 3 if you want to get in the distal, but as we can see, price clearly didn't pull back at that point. And then once we got down towards here, I pulled my order. You potentially could have left it on, but especially once we get the break of structure and M15 demand, you definitely want to cancel it at that point. So yeah, we obviously rejected some M1 supply here, but that for me is just not one I really want to risk my capital on at that point, because we're already kind of near the lows. We're rejecting extreme demand. There's unmitigated supply up above here and here, so that wouldn't really be one. But yeah, following the kind of swings in price, very aggressive entry, but not one that meets my plan really. There's no sweep liquidity or anything in here, and I don't believe it flipped an M1 zone either. If I look left, it flipped this sell to buy range, right? But there's no clear M1 pivot demand here for it to reject. So yeah, not a trade entry for me. And then once we got the break of structure, came into this M1 level, once we swept that, and then we got that momentum coming in, it was the momentum really that I kind of thought, okay, maybe this is worth the risk to play a quick pullback. So yeah, set an entry on the EQ, I believe it was a 3 pip stop, on the EQ, and then got stopped straight out. I kind of even knew when I put it on, this is really low probability, is it worth the risk? It is what it is, right? You're not always going to have the discipline to stick to those high probability setups. I think I was a little bit annoyed, that kind of, not annoyed, but just, you subconsciously have that FOMO, looking to try and play a quick aggressive pullback play, and got stopped out. So yeah, for the 90% of you, I would say stay away from counter trend trades, counter M15 and counter 4H without even an M15 chock. It's just not worth it. Or if you are going to do it, you want to see those real clear ones, big build up of liquidity, nice big V shape, right? They're the kind of trades you want to be looking at, not like that first initial kind of crappy little movement up. But once I saw the momentum, that's basically what kind of suckered me in. Then once it got stopped out, we kind of mitigated. Well, we did mitigate the M1 extreme. However, the reaction, look at this. So if I just kind of show you where the M1 chock was, it was this inside bar was the nearest level, okay, because that was the last M1 internal pullback, straight movement down, pullback, straight movement down. So that was the level that needs to go. But look how long it took, right? Yes, it might overall look like a V shape, but that's impulsive move down, and it takes ages, like minute by minute. Look at all of these candles, right? Then we come into the M1 supply. Yes, we react and push up. So it is a flip and a chock. But where are you going to enter? Are you going to, I'll draw on so you guys can follow. I appreciate it's a little bit messy if you're not super experienced with this style of trading, but essentially what I'm looking at, what I'm going to do, I'm just going to delete this because it's getting very messy. So it is a valid sweep of liquidity, high time frame mitigation with a refined M1 level, right? We have the chock, we have the flip because we come into supply, we failed to put in a lower low, right? Failed to break this low, and then we push up. So yes, this is a valid, right, thing, but this is where you have to, not just go, okay, it meets a flip and a chock. You have to go, for me, it's not really what I mean by a V shape, because yes, it is a V shape, but the whole point of that criteria in your plan of saying V shape, what it's really trying to get at is momentum, right? You want to see impulse in, impulse out, but more importantly, it's that impulsive rejection that we want to see. We want to see big orders being filled, an overwhelming imbalance between supply and demand, right, coming to the market. But look, how long does that take? Let's see. It took 16 minutes, 16 M1 candles, right, for that to happen. It should be, a few candles, right? This is super slow and corrective. And even then, right, are you going to enter on that? There's all this stuff below. There's nothing clear within here. So no entry there for me. So as price is coming back down, right? There's nothing here. Basically, I was expecting this low to go and then price to come into here, and then I would have looked for the next setup, right? If you're still keen to play the counter trend longs. But then what do I see? I see price start to have a lot of momentum come in. So go, okay, try and paint the story a little bit, right? We do have this. So I'm going to delete this because I wouldn't have had this drawn at the time, right? This is the way I'd be viewing it. I go, okay, well, we've mitigated something within here. For me, it's not really an M1 zone, right? This has already been mitigated. There's no M1 entry within here, right? I would never set a limit here to get that long. That's not a valid trade. But we swept liquidity. Obviously, we might be building some sort of demand chain on, right? There'll be like a 15-second here or something following on the mitigation from this M1 extreme. We've had a lot of momentum. So if we had a broken and close up above here, clear, right? Then I would have been happy to set a risk entry here, right? Or you could look to play, right, another confirmation entry as price comes back down, right? Yes, you're running the risk that's left nice, perfect, equal lows, and it's heavily counter trend. But if it had done that, got a clear, strong close above, it's swept liquidity, I would have been happy to take the risk, right? Even though it's still not the highest probability trade in the world at all. But yeah, I would have been winning that. But as soon as you see this, especially the way it happens, like sweep like that, clearly fails to close up above that high. These are weak lows right now, and then that's when these are clearly perfect equal lows that have now been left, and it's a lot higher probability that these are going to be run. Okay, which is then what ends up happening. We come into the M15 demand zone, okay, more kind of the extreme of that pullback that I was talking about, right? This zone down here. You could potentially be using that zone that we were just looking at as inducement. However, as price comes in, there's no M1 shock. It's end of session. I'm happy to leave these counter trend longs alone now, right? This I know some people might think that's a chalk or there, but look, all of those candles, 1, 2, 3, all break the prior candles low, so that's all part of the down move. So yes, on the 15 or 30 seconds, that would be a trade. But yeah, one that does not meet the M1 entry rules if you were trading the M1. And also, if you are going to use a seconds entry, generally I would advise you wait for a M1 zone to be hit rather than just the edge of an M15 zone would be my advice in general there. Cool, so that kind of wraps up the session. Yeah, a little bit frustrating, didn't manage to catch the short, but it is what it is, and took a very, very low probability M1 trade. It's kind of about as aggressive as I'll ever get really with kind of those counter trend pullbacks, but hey ho, it is what it is. It's just -1R at the end of the day. So now prices come into this 4-hour demand zone. We may see a bit of a reaction. However, it's just a sell to buy. It didn't flip anything, has no inducement, didn't sweep. It's a crap 4-hour zone, for lack of a better phrase. We have also had break and close below this kind of minor low here, so we do now have 4-hour supply. So we literally could just see a little bit of a pullback into here and then looking for a continuation of those shorts, right? Because in theory, like I said, if we keep things super simple, and this is again me talking to myself but out loud to you guys as well, try not to overcomplicate things too much. The trend is bearish on the daily, the 4-hour and the M15. We've mitigated 4-hour extreme supply. We've had a sweep of liquidity. We've had a lot of momentum to the downside. These old demand zones should, in theory, be what? They should just be there to provide, short-term reactions up into 4-hour supply to then continue the down move. Likewise here, probably a pullback into supply to then continue the down move. Okay, that is the highest probability scenario. Yes, of course, we can look for longs within here because that could happen. We could get a supply fail, we could get a bullish chalk, and then we could push up higher, right? So that's why if you want to be a bit more aggressive, longs can make sense on these levels, but you need to manage your expectations if you do take any trades of taking extremely heavy partials, if not full profit, or just ignoring these entirely and focusing on the pro trend stuff, right? We got this 4-hour supply as well. You might want to refine that to the wick, etc., etc. But they are the higher probability trades. Whether or not you take a loss here is kind of besides the point. You have to think about large sample size of trades. What should I be focusing on? It should be right now only shorts from 4-hour and M15 supply, right? If you're looking for the highest probability of things. So that's why I'd be, my main forecast would be coming into New York, probably a small reaction into here to then push down lower and then continue that move. But obviously if we then do get that move, supply fails, we've got a chalk, then you can look for that. But then again, be wary, we're coming into this big 4-hour buy to sell here. So that's why I'm saying shorts are definitely, in theory, the easier trade. We are now playing within a new M15 supply range, right? So that being the strong swing high. This will most likely be that swing low. We are coming into, just tidy this up a little bit, this sort of M15 buy to sell here, which is technically supply, but it's not great, right? Because we've come into this demand zone, okay, we've reacted, we've pushed up, we've obviously failed to put in a higher high so far, but we haven't actually closed below the reaction. So this isn't a valid flip. It's just a supply zone, right? Because it's a bullish candle engulfed by a bearish candle that did lead to an IBOS. So it's not the best. Potentially you could look from aggressive shorts within here, but you're trading against M15 demand, 4-hour demand, right? The higher probability trade is going to be up here. So the next sort of level I'd be looking at is this M15 supply zone. Following that demand chain, okay? So it's not technically, if you're super strict in M15 supply, because it should be a bullish candle, but this is where you can kind of cycle through the time frames a little bit. Yeah, you go 16, right? Now you've got the bullish candle engulfed by the bearish candle. So that's what you can do if you want to be super, super, super strict. And that would be the level I would be looking at, potentially coming to New York. Obviously, it's getting a little bit tight, right? We're kind of very near for our demand and for our supply. But in theory, right, this should be the level to look for shorts continuations and then push down to the next level, right? And so on. So that would be, how it is. Let's see how that shapes up coming into New York. Cool. Hope that you guys took some value from that. And I hope you guys have a good end to the week. Make sure you enjoy your weekend, but kind of set a goal to get one sort of big thing you want to get done this weekend, whether it's trying to master one specific concept or really focus on one specific concept in the course, whether that's structure, S&D, liquidity. Maybe it's just doing your markups. You want to crack on with backtesting. Maybe you want to build five really solid case studies this weekend. Make a very clear goal that you can do and get done and prep yourself for the week ahead. And then you'll be coming into next week with a real solid and motivated mindset. So I'll leave that there. Obviously as well, we've got the Zoom call meetup next Monday night as well, which I've added to the events in the Discord. So yeah, see you guys next one. Cheers.